The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour. I'm your humble and lovable, maybe not humble today. We'll talk about humble later, but lovable host of TFNN's Power Trading Hour, me, David White. Larva tested, pupa approved. And as we go through today, we're going to see a market that had quite the turnaround today, a low of 1835 on the S&P cash, printing off about 1870 as we speak with 3.3 billion shares. And again, you know, you probably got to go back and listen to yesterday's show to see how unhumble I'm probably going to be, at least for a little while. And we'll talk about the problems that causes with me in a minute. But it's precedent, but making gobs and gobs of cash. And we'll see how this market closed today. I imagine I will be closing out my positions at the end of the day if I get the expected short squeeze that we are looking for. I'll let everybody fight out tomorrow on expiration day what happens, but it is going to be an interesting movement. I told my readers this morning, I wrote to my readers this morning that there was a 1 in 50 chance that we closed below 1900 on the S&P cash by tomorrow's close. And statistically, that is correct. That doesn't mean a zero chance that we close below it, just 1 in 50. Range would say somewhere between 1900 and 1920. We brought up this chart yesterday. Let me bring it up again just so I can show you. But what you want to do most of the time is look for, they brought it up in the discussions with about global warming. But there is always that hockey stick. And in statistics, you want to see that hockey stick as the movement to really start looking at. But you're going to see that the hockey stick really starts about 193, but really turns up about 190 on the SPY's options. That is pretty much the point right there where you see this thing go, you're going ballistic, Maverick, you're going ballistic. Oh, boy, what a horrible. I love the movie, but, boy, when you look back at it, a little over the top in some part. He's going ballistic, Mav. He's going ballistic. Anyway, the 190 range, pretty much where that thing really starts taking off. And you can even say up to 120, probably. Earlier, did I think 135? Yes. What would be the worst would be 180 or 198, but I'm not believing that we get to that level in one day. But could we certainly get up above 1900 and tag it for a second and see a huge dump? I think that at least the option market makers would probably start exercising a lot of their options and start trying to see if they couldn't minimize the damage during this month. But it is rare for them to take that kind of movement down. And what happens, or what normally happens, is over the last couple of days, they will be selling everything that is not tied down in the way of a put. And they'll be trying to basically get all that cash back to make up for the big losses they had by the huge market move down, by basically grabbing all those people money that bought in the last 2 or 3 days of the options and destroying all the premium that is in a lot of those puts. When I talked yesterday about buying 10 and 25-cent options, especially in the IWM stocks, it was all about that. I didn't want to be able to have them take my premium away. I don't want them to take my Kodachrome away from Rhyme and Simon. I don't want them to take my premium away. We actually added some additional positions yesterday, just before the show, and in calls, which are paying off rather handsomely now. And I added one position this morning, and if we probably talk about it before the end of the day. So got a few positions in the daily newsletter. This movement is moving far too fast for the investment newsletter, but we got out fairly decent levels and basically rang the registers and took our immensely huge profits off the table. Maybe there was a little bit more down to the downside, but I kind of like getting out a little early, cleansing my palate like all those wine testers do. You know, I can't tell any difference other than wine is sweet or wine is sour. You know, oh, that's dry wine. Why do they call it dry instead of sour? Sour grapes. Ugh. And women love that miserable white Zinfandel sour stuff. I have no idea why. Anyway, we're up 5 points on the S&P cash. We've got a huge amount of volume out here. Yes, are we going to come back and test these lows? Yes. Are we going to do it immediately? I don't think so. I think we've had our washout, and this is the opportunity for you to sell in the next couple of months, I think, before the end of the year. But I digress. We'll get along in just a few minutes to the rest of it. On this day in, actually, why does it say 1978? It's 1878. When Alva Edison, backed by J.P. Morgan, establishes the Edison Electric Company to commercialize his month-old incandescent bulb discovery. And of course, he came up with the film camera shortly after that, and really didn't come up with anything after that. Just stole inventions from then on and claimed them as his own. So, interesting guy, but toward the end of it, horrible liar. Kind of Steve Jobs-ish, right? Came up with the original computers, but of course the Macintosh interface was taken from Xerox. Came up with the tablet idea, but Microsoft had been showing that off in the early 90s, claiming it as his own. Of course, certainly he monetized it. The other guys did not. But everybody's always claiming to be the father of some invention, and generally it is somebody else that comes along and cashes in. It's not the first guy that has the idea for it. Probably no more better example than the guy that made VisiCalc, only to not patent it and make $5-6 million and make people make billions on it over the next 20-30 years. But I digress. Other things going on in this market out here. Yesterday I said you try to be greedy when others are afraid. You have to try to have fear when others are greedy. And I'm trying to have a lot of greed out here as we watch this market. I probably would have taken my cash a little bit earlier and quicker if I still didn't see so many people afraid of this market. But we'll see how the last couple hours works out for it. I suspect that we are seeing IWM tell the true story. It's up, $1.25 yet again today, and it's going to be very problematic if they can't roll this thing back down before the close. I'm looking for a short squeeze that will probably take us up to probably 1885, 1890, and a little bit of a pop tomorrow to get us 1900. And I think that would probably be kind of what I'm looking for. Now, the only question is whether or not the bears have a few more Molotov cocktails to throw on the top of this party. But awful hard not to say hard to say that we're going to sell off before the end of the day. So I'm going to be willing to sit on my hands for a little bit longer out here on my calls and all those out of the monies that are now in the money and see if I can't squeeze out a few dineros more. Question, J.P. Morgan eventually had to back Nikola Tesla. No, he did not. Basically, Westinghouse came in and signed a deal with Tesla and put the whole deal together, and it was Westinghouse. Tesla sold all his patents on AC to Westinghouse for basically nothing to screw over Edison. And Westinghouse didn't have a lot of cash at the time. It's unclear even if he didn't sign a deal like that, whether or not he would have been able to make it, or Westinghouse would have been able to make it. But at least Tesla had his revenge. But Tesla wasn't into money. He was mostly into just having a lot of eyes. We talked about the rules for options yesterday. The other thing is, of course, don't stay too long to the party. And I'm going to probably have a lot of self-doubt that maybe I did that all the way up into the close today. But more than willing to sit on my hands for a while out here. Of course, after the bell tonight, we have Google, Capital One, and SanDisk. Before the bell tomorrow, Honeywell and Morgan Stanley. Now, not a lot happening, of course, tomorrow. But Monday, we've got Beeve Aerospace and Genuine Parts Company, Halliburton and Peabody, and PetsMed before the bell. And Apple, Chipotle, Mexican Grill, Flowserve, Illumina, and Itty Bitty Mines Company after the bell. So we're going to have a lot. Of course, Apple having a day today where they're rolling out some new products. Was thinking about buying calls on them this morning when they were down under 96, but it really just didn't seem like it was getting that much juice. I figured it would have been moving a little bit better if it was moving, but it probably would have been okay. But I wanted to buy 98s, and it didn't look to me like in the early trading that there was a lot of juice in that. But I'm expecting on earnings for this thing to pop back up to $100 on Monday after the bell. Other things of interest out here. One of the things that you hate to do is wake and make a lot of cash, like my readers have in both newsletters. And over the last couple of days, see the real movement. What am I sitting on here now? We bought puts at, or bought calls at 60 cents, and they're printing $2. So 20, 80, 200 and some odd % return on a couple of day option play. I hope I'm not cursing myself. But one of the things that Joe DiNapoli, who was a contributor here on TFNN when I was just getting started, 98, 99, and 2000, basically did most of the work for Confluence and figuring out how to use Fibonacci levels. I'll talk more about him when we come back. But he had a good recommendation at the beginning of his book that I want to bring up here today. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back to flat on the S&P cash. And anyway, we were talking about making a lot of cash. And if you trade long enough, you'll have some huge trades. And Joe DiNapoli had a part in his book who said, it basically said, I don't know if it was self-serving or not, but did kind of hit me at the time, and I've thought about it several times since then. He was basically doing a lot of work with a CPM 80 computer, probably, I don't know, 1980, 83. And most of his ideas are still centered around those early days that he worked with a pretty basic computer. To go back and look at things. But you know, one of the things he did have was that he said, you know, if you use these techniques correct, you're going to make some huge money at some point. And at that point, you're going to want to start taking more and more reckless trades. And he basically said that anybody that trades and starts making huge cash is going to continue doing that until they blow themselves up by being wrong one time. I've always thought that maybe after a couple, if I've made some monster trades and made some monster money, that probably the best thing to do is an old trick that I think it was an Anthony Robbins thing, or maybe it was one of the other guys in NLP. But one of the things they used to always say was, if you're dealing with somebody and you can't get them to really settle down, just tell them something like, take all the time you need in the next 60 seconds to get that out of your system, and then just figure out how we can go on. Or take all the time you need in the next 30 seconds to think about that, and then tell me how happy you would be to buy my car or my whatever it was. So some of these things are just techniques and things to say from salesmen and from Tony Robbins and some of those other things. But I always thought of it a good way to maybe get centered, and that is I take all the time in the next 5 minutes after I close a trade to gloat, and then I try to forget it, because I know that I can become a sucker in a New York minute, and for a sucker play, you get a sucker's pay. And I like that out of Jesse Livermore's book. But just always know that the market is ready to humble you at the first sign of any kind of ego. And I may just take a couple of days off after getting out at a couple of these trades today. I'm really not, I kind of get a pretty good idea of what's going to happen tomorrow. After that, it becomes a lot more foggy. I suspect we're going to have a very violent up 15 points one day, down 15 points one day, up 15 points one day. I'm anticipating a lot of chop next week. And if you don't have probably very narrow and very, 1 hour time frames for trading, probably going to be in a very wicked market as options roll over Monday and Tuesday, and Wednesday maybe we'll get some kind of idea. But I continue to think, someone asked yesterday on whether or not we are going to get something. Andy has, Andy says the easy money has been made. It's never easy, Andy. It's never easy. I probably have more self-doubt than anybody that reads my newsletter. Give you an idea. I just try to manage it very well by sitting in a hot tub, by riding bicycles and taking my dogs for a walk, by listening to good music, trying to figure out, great, pretty good. Somebody said, picked up a used copy of Joe's 1998 trading book. May have been, never have opened it. But if you've read Tom O'Brien's one, Tom basically took a lot of what was in Joe DiNapoli's original work and added volume to it. So I'm not really pushing people to get his $180 book. I think Tom has done a very good job of, I kind of think of him as the Tony Robbins of self-help. Tony Robbins goes out, he finds all the stuff that works, he tries to put it in one kind of unified field theory of trading, and Tom's taken a lot of different things and put them all together, kind of the best of all worlds from people he's talked to. And I think his book is probably as close to trading as I come, other than I'm a little different than him. He likes to play ABCs. I like to take shots at stocks at highs and lows, where I think I have maybe just a little bit better idea. I will play ABCs too, and like the last 2 days, I will play Gartley patterns and other things also. Just remember, a sucker play gets a sucker pay. So don't get too high and mighty. The market will humble you in a New York minute. Be back in a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're up 6 points on the S&P cash at 1868.77 with 3.5 billion shares. And if anybody wonders, maybe new to trading the last couple of years, I'll hear me and Tom and everybody else talk about low volume. This is what volume was every day for years. So 3.5 billion coming into 230, no big deal. We'd have 6 billion shares on the New York Consolidated Tape many times at this time of day. And to tell you the truth, a big day was 7 billion shares. So we're getting back kind of to the way the market probably should have been operating on. I think some of that volume was taken out when if you bought and held, you were able to get some huge margin. That margin, I think, is coming out of the market. But I do also want to, somebody in the den brought up the fact that that you're getting some huge bounces out of these bulk shippers. And they've been horribly mangled and shorted, even these cheap stocks. But through ETFs and other things, people had been piling in on them for a while. But there's a great part, and I don't have it up here now, but I always go back to it. And it's a small article written about Conditional Expectation by Nassim Taleb. But it basically gets into a woman born in a Western country right now should expect to live to be about 78. If you get past about 65, that conditional expectation will probably go higher because you weren't killed by a childhood disease. It basically isn't a straight line, is what I'm trying to say, because there's a lot of things that'll kill you while you're young. Drunk driving, probably the most notable one here in the United States. If you can make it past 25 and not die in a drunk driving accident, then you're probably going to add 10 years on to a conditional expectation in that something you did when you were young and stupid didn't kill you. But pretty much if you're a woman, you can look at 78 as a fairly good thing. But once you get into 78, then your conditional expectation goes a little bit further, i.e., you probably were healthy and didn't die by 78. You're probably going to have a little bit more room to run. But that normally is the overshoot. And from then on, you start looking at making bets on women that are 90. And will they make it to 95? And if they're 98, do you say that they'll make it to 100? And if they're 100, do you bet that they make it to 101 or 102? And if they're 102, do you bet that they're 102 and a half before they die? And the conditional expectation kind of is on that kind of curve. But if you found a woman that was 140 years old, the bet would be she lives one more minute. And that's the kind of thing that you should know, is that as trades go on, if you've made 80% of the money you thought that it's going to, you're now betting that for the last 20%. And that's kind of where I'm talking about staying long to the party out there. IRS distributions to 103 years. We're screwed. Anyway, it is one of those things. You can give me a call, by the way, at 877-927-6648. You can email me at path@tfnn.com. And question from Ken, who doesn't tell me where he's from. He apparently is from the moon. But has reached me via email at path@tfnn.com. But Ken asked me, will I go short at 1900? Hopefully I answered that earlier on, but maybe the best answer is in here, because I've been imming Andy during the break, and he says, from now on, it's going to be a freak show. And I think that's probably the best description of what I think I'm going to see here Monday, Tuesday, and Wednesday. It is going to be very tough, if not unpredictable, for a few days. And I'm going to probably cash out, like I said, either before the close today or tomorrow, and then I'm going to sit back and wait for the next signal. I don't think I have a signal to follow up this one. I love the signal that told me to cover my shorts. I love the signal that told me to go ahead and buy out of the money calls for the next couple of days, because they were incredibly cheap, and the idea was that the market was probably going to run fairly decently, at least to the upside. I was hoping for more. I was hoping we'd be up about 1890 right now, and I'd cash out, and I'd be headed to the bar. But no such luck. Market is not nice about letting me go to the bar quickly today and ingest copious amounts of wings and cereal malt beverages. But I digress. Anyway, good book, Joe DiNapoli, but probably a better book, Tom O'Brien, in figuring out a framework to put that together with volume. But if you got the book, I would recommend reading it. You'll see where a lot of Tom's ideas originally came from, but how he improved on them. Like everybody, we stand on the shoulders of the people that we knew to begin with in technical analysis. I had somebody say that they were all responsible for my successes in technical analysis. That was not true. Everybody from Wyckoff to Jesse Livermore to people in the 40s, 50s, 60s, 70s, to everybody I listened to on TFNN, Tom O'Brien. I don't trade exactly like him. He doesn't trade exactly like me. We all kind of find the things that we find it most useful to come back in it. But I digress. Anyway, give me a call at 877-927-6648. We're going to look at some of these charts. Oh, got a call from Jack in Jupiter, Florida.
Hey.
How you doing, Jack?
Doing great. How about you?
Another day in paradise.
Yeah, I know. I called the other day to congratulate you because you have been doing beautifully. But here's my very short question. The other day also when I talked to you, I was saying the chart, the daily chart looked incredibly weak and it was rolling over, and then subsequently it did go down. Mm-hmm. What is going to prevent today's daily chart from rolling over and coming down that you see? What is going to prevent the sellers from coming out of the woodwork in the last hour in case another Ebola case comes out overnight or?
Well, I mean, you've always got that risk down here at these lows, but it's not what I'm seeing in the tape, and it's not what I'm seeing in options. The option market makers have not thrown in the towel, and it's Thursday. Okay, that tells me that they think, as a group, that there's nothing in that. The other thing that I see is reading the tape. And in reading the tape and going buying the out of the money calls yesterday, one was the fact that I had enormous odds on my side, and I was probably going to make money no matter what, even if it doesn't go.
I love that trade. Yeah, that was perfect.
So,
but now at 2:30 on Thursday,
right. I've got to wait until the last 30 minutes. But when I'm looking at the tape today, what I see is, and I've always called it firing for effect. I don't know if you know that term.
I'm not sure of that one.
Okay. If you're out on the battlefield, you can do one of two things. You can say, I want to hit this location with this mortar or this big gun I have over here. I've got a 130 millimeter gun, and I'm going to shoot it, and I want to hit this pillbox. Or you can do something else, which is you just line up a ton of guns and you fire them all. That's called firing for effect. And you do it all at once, right? And you just literally demoralize the people on the other side, and they're all shell-shocked, and they can't talk, and they can't hear, and then you run at them, right? Gotcha. So in the Army, it's called firing for effect, and you want to scare the living bejesus out of them. You're not trying to destroy a individual thing. You're trying to destroy the morale of the people on the other side. And all day what I've seen is that the big men of the street have been firing for effect. This morning they started with firing for effect on the futures. I think, was the Dow down 350 at one point in the futures? I think something like that. And of course, by the time the market had opened, it was already at 150. Right. And, you know, the rest of the day was just coming back. But everything I see out here is people firing for effect and then slowly buying for the next 20 minutes. And then next thing we see is the market bounce up a little bit higher, bounce up a little bit higher. So is it a little harder to see that maybe we go to 1890 today? Yeah, so I'll take my money and I won't cash in as big as I thought I was. But what I still see is as soon as they hammer the market down like they have, 10 points off the high right now, right? Mm-hmm. Now, does it go into sell mode? Do I see volume pick up? No, I see it go sideways, and people just slowly picking away. And that's normally a sign of two things. If big people on the street think that the market is bottomed, it takes them a while to get out. So they'll come out and they'll probably tell somebody at Walmart it's time to throw out a downgrade. They'll ask all their favors to come in. And I'm not one that sees a conspiracy everywhere, but I do wear an aluminum foil helmet to keep everybody from reading my thoughts on the market. But I see too many of these things happen. I also see at the top millions of wild upgrades for billions of dollars on Tesla and Netflix. At the bottoms, I hear that there's no end to the amount of people that say that the end is nigh. And I've seen enough of that in the last couple of days to make me think that these are the same dopes that they send out every single time the market goes down to say that the market's going to hell in a handbasket. Those guys weren't out there 2 weeks ago, were they, saying the market was going to hell in a handbasket? They pushed those guys out at the bottom, and they pushed out the guys that say it's going to the moon at the top. And I just look at them as paid liars.
I love it.
But what I like the best, I don't know if you heard me talk with Tom O'Brien on Friday, but I was saying, hey, I love the fact that these guys that were CNBC correspondents were talking Monday morning and saying, on that Monday morning, we're saying, this market's never going to pull back. It's never going to let you in. The biggest dopes tend to be the guys on financial infotainment. They're not even in the market. But, you know, and they haven't learned the lessons that people that actually put their cash at risk. They're in some 401k. They just hope the market keeps going up.
Yes.
So, and of course, they also know that in any pullback in the market, their viewership can be 50%. My guess is that their viewership is up 150% over the last 8 or 9 days. In a couple of weeks, if the market goes flat, their viewership will be down 50% compared to what it was a month ago. And I imagine if we looked at the numbers at TFNN and people listening, instead of really paying attention, they will get scared and wander away from the market. Only 10% of market participants individual investors will ever short the market. And that means that they wander away during the down times, and they only, like a moth, get attracted by the light of a ever-increasing higher market. I love that.
Yes.
I'm going to have to write all this stuff down.
Nice. Yeah, on a roll, baby. It's a beautiful
I'm on a roll, baby.
They actually talked to that guy today who was the last bear to capitulate, or at least one of the last bears. I forget the guy's name.
Is that the guy saying he wanted 2250 on the S&P or something? From Stifelus Nicholas?
I can't remember who the heck it was, but I think that's actually at the beginning of the year, or early in the year, he was calling for 1850. And then
that's the guy from Stifelus Nicholas.
Okay. At the high, or maybe in August, he went bullish.
Yes.
Classic. He threw in the towel. And,
I pretty much do whatever the opposite of Stifelus Nicholas. It's actually, what is it? So those guys, I tell you what, I'm trying to remember the last guy that was right from those guys. I mean, they've got a lot of analysts that come on, and they're invariably 180 degrees out of whatever the stock is doing. I'm just pretty sure that they're always on the opposite side of whatever those trades is, because if not, they'd be broke already.
Yeah, you got to keep the tinfoil helmet on.
I've got it on there, and I'm going to go check out that.
That was terrific.
But anyway, no, to me, will I be shorting? I don't think so. I think we're going to see a market that's rather violent in the first couple of days, especially into next week. I'm going to wait for the next signal to come and kind of sit back. But I just don't see a great deal of selling, even in a 10-point pullback here in the S&P cash. May I not get what I want today? I could. I mean, I'll probably close out my trades. Maybe I don't get the bounce I'm looking for. But, I'm still looking at a 50-to-1 ratio that this thing closes at 1900 or above on Friday at 4 o'clock. And,
those odds are good.
35 points below that today. Can it still happen? I think anybody says it could that's been around markets long enough.
Yeah. Yep. Well,
all we need is a couple good earnings, short squeeze to start. What's that?
That was terrific stuff. I really enjoyed listening to you. Thanks.
Okay, you bet.
Take care.
We'll talk to you all on the opposite side of this break.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And in the next hour, of course, we've got the Tom O'Brien Show. Andy Heck coming on to talk with Tom at 3:20, and his show at 5 o'clock for the full hour. And, of course, always like listening to commodity traders since they sleep like babies. They wake up wet and crying. Anyway, it is going to be interesting to see how the market closes out here today. But we shall see. I'm going to have to see whether I hold my positions one more day. I thought we'd probably be rocking up about 20, 25 more points by now. Like I said, I wanted to be at the bar drinking copious amounts of cereal malt beverages and chicken wings with the level 11 hot wing sauce on them. But it doesn't look like it's going to happen before the end of the day today. It looks like I'm going to be here till 4 o'clock and that bell rings. Like I said, it's no easy cash out here. What else do we have? We're looking at the spiders out here. We've got huge volume. Is it going to be tough to see a lot of people roll into these before the end of the day? Yes, but my guess is we've had people shorting this and still a lot of short interest in this. And you just need one good news to get a short squeeze going. It won't last very long, but normally I haven't seen the people scream that are short yet, and I suspect, much like I was looking for desperation, demoralization, and depression at the lows, I'm going to look at some kind of euphoria as this is all over in the next 24 hours. And at that point, I will pull the plug on these out-of-the-money calls that I have, but not tempted quite yet. I'm going to watch how this market closes at least. And I have a feeling if the IWM closes over 108, that is the next brick out here to push this market higher. It's going to be very hard. The IWM let us down, and I think it is leading us up today. And the only reason this market hasn't run yet is the big guys are not done covering and buying for the next leg, however short it is on the way down. We're flat on the S&P cash with 3.7 billion shares today. Okay, what else do we have? What else do we have? Got a few people that are looking at some of the stuff I am doing. Some people sending some emails, but yet again, I have to turn to Darth Vader for...
I find your lack of faith disturbing.
Yes, I do. I find your lack of faith disturbing. Anyway, we'll see how the end of the day goes, but I think probably premature to be making any kind of big decisions just yet. I want to look at that last 15 minutes of trading out here today to see exactly how things are going on. Had a ton of stocks out here that looked to me like even the most horrible of the stocks had looked like they'd found some light volume. We saw a huge volume down in the AMC networks. And we talked about this, I think, the other day. But the last low out here, May 8th at 53.99, had 6.5 million shares. The best we could get was 1.1 million shares. We went below it. We are now going to be closing above at least that spike down today, and we've done that for 3 days out here with light volume. So I think we're seeing more of these things that could have light volume. Look at BlackBerry. Even this dog, full of fleas and ticks, couldn't get more volume yesterday to bust through that 871 of the last low. So we'll see you tomorrow. Same bat channel, same bat time. Remember to sell when you can, not when you have to. Cover when you can, not when you have to. Also.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, the opening call, today.
You're watching Tiger TV.